Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, March 6th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So global equities remain in a fragile, volatile state. In markets, they remain on edge and have been whipsawed all week long as investors weigh in really the duration and the economic consequences of the conflict, particularly with any sustained disruption of the Straits of Hormuz, boosting those oil prices, crude oil futures, and also natural gas. Heating oil also turning higher here with oil futures up about $5. April crude oil at $86, putting pressure on U.S. equities, some of the foreign currencies, some of the precious metals coming off as well, with copper futures pressing their lows as it is recording. Now you look at April gold, the highs of the overnight session, 51.60. Lows of the overnight session just achieved here about a second ago at 50.71. Looking at the silver market, sitting at 85.08 is the highs of the overnight session, 82.02 is the lows, and futures just achieved that about a minute ago. So you look at volatility here for gold, it's sitting at 35.31, the 10-day exponential average true range at $152. Now the metal surged on safe haven demand when the Iran conflict broke out, briefly touching about 53.77 on that first day, but since then has consolidated from that initial shock because of the fact that this war effort is priced in and a lot of people taking some of those positions off. They tend to take off a lot of their long-term, longer legacy positions that have been up for quite a while here as they see some of those profits slip back. So you look at the Dubai air freight here. It's a key global transit hub for handling about 20% of the global bullion flows. And what it is we're seeing that shut down there. It's creating a tightening physical premiums across the Asian markets. We'll see if that has any kind of effect on the gold market here over the weekend. Your key levels of support are 50.50, 49.96, and 49.37. Really, if futures fail to hold that 50.50, it could expose a test of the 5,000 psychological mark, 49.96, and potentially a complete washout down to 49.37. So you want to look for a break on the upside here. Anything above that 51.08, that could really open up the door for 52.66 and 53.20. May silver here, the highs of the overnight session, 85.08, the lows 82.02. Now futures have already bounced 50 cents higher here. You get the 10-day exponential average true range sitting at about $6.40. Silver volatility is below that 80 level at 79.99. So I looked at the CFTC, the commitment of traders data here for March 3rd, and it really showed those large speculators. They're trimming their long exposure to about a 2-year low. They cut about 22,000 contracts, and it could be the reason why we're seeing some of those ETF outflows. Now you look at copper. Copper's been caught between these like two competing forces here. You've got the bullish structural fundamentals from the AI infrastructural build out. You got the energy transition here, demand, and then you got these supply deficits, and silver kind of mirrors some of these different dynamics with the copper market, but then you get this bearish near-term macro risk from the Iranian conflict and the global growth uncertainty. You want to look at China here because you want to watch for any additional fiscal stimulus announcements here or comments on domestic growth targets here. Any material surplus could be that near-term support that copper, silver, and the Asian equities most likely need. Now you look at the precious metals, the ETF outflows, where they're selling gold, silver, platinum. You look at gold ETF flows dropping about 0.1% here, and the exchange-traded funds, they cut about 93,000 troy ounces of holdings. It was the fourth straight day of declines here, longest losing streak since February 6th. And you look at total gold held by ETFs, up 1.1% this year to about 100 million ounces. Now gold coming into this was up about 19% here, but it fell about 1.1% in the last trading session. So we're starting to consolidate here a bit. We'll see if we can hold this particular gain. Now you look at the silver ETF flows. Well, they dropped about 0.1%. Year to date, slipping them down 4%. In the ETFs, they cut about 992,000 troy ounces. You look at the gold silver ratio, about 61-1, similar to what we saw yesterday. You look at the macro market and you look at the global equities, the US equities, well, they're really in a fragile state here under some serious pressure overnight. Now, the key things to watch here today, besides obviously what's going on in the Middle East, is you're going to have the non-farm payrolls, the unemployment rate. This is the single most important data release here for the day, and a weak print could reinforce those Fed cut expectations, boosting gold, pressuring the dollar index, while a strong print here would really put the problematic thing as far as you've got this oil price, this higher elevated inflation. If you get the stronger jobs reading, you could really see a rug pull on a lot of these markets because it's going to complicate the Fed's path here significantly. You will have numerous Fed speakers coming out. Daly, Goolsbee, Paulson, Schmidt, Miran, Collins, and Hammock are all speaking here today. So it's going to be a Fed speaker, basically a symposium over here. And then you go to the rate cut expectations. Well, it's stagflation is the theme here. You got rising inflation, declining growth. You look at the CME's Fed Watch tool, you look at those interest rate cut expectations. Really, you go out to September, that's where it's fully priced in. September, December, you really aren't seeing any kind of movement in July, and you won't see that till after we get the Fed meeting here, or I'm sorry, the non-farm payroll data coming out. You'll get the dollar index here, 99.32. That high of the last couple sessions, right around 99.49 on up to 99.60. If we start to get back up to that levels, that is what's going to also potentially pressure those metals, the emerging markets here. You get the euro currency sitting at 115.68. You get 10-year treasury yield sitting at 4.18% here, so continuing to edge higher. You get the volatility index at 24 and really in the mid-20s here. A move over 30, that's going to signal panic in the markets here, and that's a condition where if we get that type of movement, you could see a really big floor open on the equity markets here and this panic drop, something we saw similar to last April. Now, if you could get the volatility index back to that 18 to 20 level, well, that would confirm some stabilization in the market, but we're going to need some clarity here on when this conflict's going to end to get that here. You look at Bitcoin sitting right around that 70,000 mark. A lot of people taking that big move that we saw up, where we had that massive move of about $7,000 and putting some short positions on, reducing some of that long Bitcoin exposure here, most likely just below that 70 mark. You're going to see some of the weekends really capitulate at that level, in my opinion, because that's where logical stop losses would take place at that level. The S&P gamma exposure, well, that remains here negative here, and what that does is it amplifies the moves in either direction. So those dealers, they need to sell when the market goes down, they need to buy when the market breaks out through key levels. You look at Europe and Asia, well, European stocks, they have their worst weekly decline since April, and you go to most Asian equities, they were higher on Friday, but the regional benchmark here endured one of the worst weeks here since the initial COVID sell-off here as investors continue to gauge this Middle East war's impact. The MSCI Asia Pacific Index closed the week down more than 9%, so that was the steepest decline since COVID in 2020. Now you look at the agricultural markets, those are interesting. Do yourself a favor, look at a chart on the corn, the wheat, and the soybean markets, and we're seeing those continue to move higher. You're getting some disruption here as far as global freight of agricultural products. You're also getting some of the natural gas prices, and the natural gas prices, liquefied natural gas over in Europe is really going through the roof here. What does that do? That equates to higher fertilizer costs, that equates to higher agricultural costs, in my opinion. So that's why we're seeing that big push up there, and take a look at that wheat market knocking on $6. So if you guys got any questions, I'll probably put an article up on Kitco again here. We could outline a couple different strategies. I laid one out in the silver market, most likely going to look at some things in the oil, the gold market, the copper market as well. And if you guys got any questions, shoot an email, info@bluelinefutures.com. You'll love to open up an account. Send that email to info@bluelinefutures.com. Takes about 5-10 minutes to get an account open with us. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading. Have a great
trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.